Welcome back to the deep dive. Okay, today we're jumping straight into a stack of market reports, all buzzing about, well, one massive headline from October 3rd, 2025. Bitcoin. It's officially smashed through a major psychological price barrier.
Yeah, and it's definitely more than just a price spike, isn't it? Our goal today really is to get past that initial, euphoria.
Right.
And understand the structural changes that are actually validating this momentum. We'll look at the key metrics, flows, sentiment, risk,
Right.
and then pivot to the real long game,
Yeah.
what's happening with global regulation and traditional finance or TradFi.
The core of it, yeah.
Yeah.
We'll look at those specific forecasts driving the optimism, and wow, some are high. But we also have to talk about stability and, the immediate short-term risks, the volatility. So let's start there. Let's unpack that big number.
Okay.
So Bitcoin officially surged past $120,000. That sets a new resistance level. First time since, what, August?
That's right, August.
This feels different. Less random rally, more like confirmation of something deeper,
It does. And 120K, that's a huge hurdle. Psychologically massive.
Yeah.
When the market breaks a level like that, it signals real conviction. It's driven by strong accumulation trends we've been seeing.
Okay.
But what's really interesting is how quickly major institutions are now publicly backing even higher targets.
And the targets in this report, honestly, they're kind of eye-watering.
They really are. I mean, you've got JPMorgan, right? Huge name in TradFi. They're publicly targeting $165,000 for this cycle.
165K.
And then you look at Citigroup, they're setting sites as high as $231,000.
Wow. Okay, these aren't just like random Twitter predictions anymore.
No, these are analysts inside institutions that, frankly, used to be pretty skeptical about crypto.
Right, and we're even seeing figures like Ray Dalio talking about Bitcoin as, quote, alternative money.
Exactly. And when those titans of finance kind of stop fighting it and start endorsing it, well, that gives it a legitimacy boost.
A boost that retail investors definitely notice.
For sure. It feeds into itself, A confidence loop. Crossing $120K validates the uptrend. But maybe more importantly, it shifts that mainstream media narrative. It goes from speculative bubble maybe towards strategic asset.
And that shift is critical for potentially triggering a new wave of buying.
Absolutely. And you see it playing out on corporate balance sheets, too. This isn't just trading anymore.
No.
It's about holding Bitcoin as a strategic reserve. The analysis highlights strategy.
Yeah, strategy. Their corporate Bitcoin treasury value. It's apparently soared to $77.4 billion.
Just think about that number for a second. $77.4 billion.
That's huge.
When we talk corporate adoption, we're not talking small pilot programs. This is a multi-billion-dollar company making Bitcoin core to its financial identity.
Yeah.
It just reinforces that long-term bullish trend. And it signals to other big corporations, hey, this is a viable strategy, especially with all the global monetary uncertainty.
It definitely sets a precedent. Okay, but is this euphoria sustainable? We need to, check the gauges.
Right. Got to look under the hood.
To see if this rally is healthy, we need those key indicators.
Yeah.
So where are we on the sentiment scale? How greedy is the market?
Okay, first up, the Fear and Greed Index. Right now it's sitting at 63.
63. So that's firmly in greed territory.
Yep. Indicates strong optimism. But here's the important context. While things are definitely buoyant, it's not overheated yet.
Oh.
Extreme greed, that usually kicks in around, say, 75 or 80.
Oh, right, the red zone.
Exactly. And that level often, historically, comes before a decent correction. So for now, the data suggests there's still maybe some room for this uptrend to run before we hit, structural overexuberance.
Okay, that's somewhat reassuring. But where's the money actually coming from? Is it just retail FOMO, or is institutional cash really driving this? The report points to massive ETF inflows.
Oh, the institutional demand is undeniable. Recent Bitcoin and Ethereum ETFs together recorded over $1 billion in net inflows.
$1 billion.
Net.
Yeah. That figure alone, it's like a pulse check on institutional commitment. And this capital, it tends to be stickier, right? Less likely to panic sell than maybe some retail money.
So it provides a bit more stability underneath.
Exactly. It underpins the surge. We really need to be tracking those daily net inflows religiously. They're the direct readout of TradFi conviction.
Okay, so if Bitcoin holds strong, or even drifts higher, the next big question everyone always asks is about altcoins. Is an alt season possible? Does the data hint at a rotation yet?
Well, for that, we look at Bitcoin dominance. Currently, it's hovering around 58%.
58%, okay.
Now, here's the critical signal you need to watch for. if BTC dominance starts to decrease gradually,
Decrease.
while Bitcoin's price itself holds steady or keeps rising, that shows investors are maybe happy with their Bitcoin gains.
And they start looking elsewhere for bigger returns.
Precisely. They start rotating that profit into smaller cap, maybe higher risk altcoins. That is the classic textbook indicator that an alt season might be starting. Gotcha. And the report actually points to specific sectors already outperforming. Looks like infrastructure and utility plays.
Correct. We're seeing pretty strong performance from tokens in the BNB chain and Solana ecosystems.
Okay.
But the really interesting structural opportunity seems to be building in decentralized finance, and especially RWA, real-world asset tokens.
RWA keeps coming up. Why the intense focus right now?
Because the utility is becoming much more concrete, you know? It's crystallizing. The analysis mentions Mantle launching a tokenization platform.
Right.
And maybe more fundamentally, FG Nexus planning to tokenize actual stocks directly on Ethereum.
Tokenizing stocks on Ethereum.
Yeah.
Mm-hmm.
This isn't just theory anymore. This is linking traditional, trillions of dollars worth of assets, stocks, bonds, real estate to the blockchain's transparency and efficiency.
So RWA is really that bridge between the old financial world and the new one.
That's exactly it. It's the bridge.
Which brings us nicely to the foundational changes. Because exciting price action is one thing. But that long-term stability, that comes from clear rules, institutional acceptance. And it seems the U.S. regulatory scene is maybe finally moving towards clarity.
Yeah. Connecting this to the bigger picture, what happens in Washington is probably the ultimate long-term catalyst, right?
Definitely.
The new SEC chair, Paul Atkins, he's apparently made establishing a clear legal framework for digital assets a top priority.
A top priority. That language matters.
Hugely. Institutional capital needs clarity before it commits serious size. Just stating it's a priority is, frankly, a massive green light.
And there's actual legislation moving, too. The Genius Act.
Yeah.
About stablecoins. It's being debated in the Senate now.
Yes, and clear rules for stablecoins are absolutely paramount. Think of stablecoins as the oil that lubricates global blockchain transactions.
Right, the payment rails.
Exactly. If institutions are going to use this tech for cross-border payments, they need total certainty about the legal status, the backing of the digital dollars they're moving around.
But honestly, the institutional adoption news it's kind of stunning. It really signals a shift from, conflict to integration. Let's pause on this one. SWIFT.
Yeah, SWIFT.
The absolute backbone of global international finance messaging. They're collaborating with Consensus, a major Ethereum developer.
That partnership alone, wow, it could change everything. SWIFT is building a blockchain ledger for 247 cross-border payments.
247, replacing the old system that takes days and involves multiple banks.
Right, an always-on system. It's a fundamental upgrade to the plumbing of global finance.
And the report notes this specifically helps ETH through its Layer 2 Linea, which is built for enterprise scale.
Exactly. So the world's financial utility network is effectively building its future on Ethereum infrastructure.
It's not just adopting crypto, it's adopting the utility of the blockchain itself. Deep integration.
That's the key, utility. And then you add CME Group, the big traditional futures exchange.
Yeah.
They're planning to launch 2047 crypto futures trading early next year, 2026.
247 futures. So, crypto trading integrated into every time zone, every major financial hub.
Fully integrated.
So what does all this, the regulation, the SWIFT news, CME, what does it mean for that RWA tokenization trend we talked about? It feels like these moves are tailor-made for it.
Oh, they're massive catalysts. Absolutely massive. Clear rules plus integration into legacy systems like SWIFT that's going to attract, tidal waves of institutional capital eventually.
Because the trust is there.
Right. If institutions trust the payment rails, SWIFT, and they know the regulatory environment, SEC Clarity Genius Act, then moving to tokenize real-world assets for efficiency becomes the logical next step.
So DeFi and stablecoins become the actual backbone.
Yeah, backbone of global transfers. It's a profound shift.
Okay, so we have these incredibly powerful long-term tailwinds. Let's pivot now, though, to the immediate horizon. Because even in a strong bull market, stuff happens, right? Events can trigger sudden swings.
Always.
What should you, the listener, be watching out for right now, heading into October 4th?
Well, the biggest immediate curveball is macroeconomic uncertainty, actually. And it's because of government paralysis.
Okay.
The crucial U.S. non-farm payroll report, the NFP, usually a huge market mover, it's postponed. because of a government shutdown.
Postponed NFP. So
Yeah.
a knowledge vacuum. What does that do to the market when it loses key data like that?
Uncertainty spikes, volatility increases, markets absolutely hate information gaps.
Right.
Without that NFP data guiding thoughts on inflation, jobs, policy, global markets are basically guessing. So the actionable advice here is really important. You need to follow Fed official speeches very closely.
Because their words become the data.
Exactly. In a data vacuum, the market will cling desperately to any hint from Fed speakers about monetary policy direction. Their language is the de facto data point this week.
Okay. And on the crypto side specifically, we also have the weekly options expiry today. That always brings potential for swings.
Guaranteed volatility, yeah.
Let's talk about that specific downward pressure point mentioned,
Yeah.
the max pain price.
All right, max pain. For Bitcoin today, it's cited at $115,000.
115K. Okay, what is that exactly?
It's the price point where the maximum number of outstanding options contracts expire worthless. Basically, maximum financial pain for options buyers.
Wow.
And it often acts like a temporary magnet, pulling the price towards it as expiry approaches. Now, Bitcoin's well above that now,
Sure.
but it's still a level to watch closely for short-term sort of magnetic volatility, especially if the wider market is already jittery because of the NFP delay.
Okay, so we've got this weird mix. Exuberant greed on one hand, but significant short-term macro risk and options expiry weirdness on the other.
Yeah, it's a tricky confluence.
So what are the absolute crucial risk mitigation strategies from the report that you need to be thinking about right now?
Number one, tight risk management is just non-negotiable in this environment. Use stop-loss orders, seriously. Protect your capital from those sudden whipsaws from macro news or options expiry.
Stop losses. Got it.
Second, diversification is absolutely key. Don't just bet the farm on Bitcoin's price going up.
Right.
Spread your exposure. Across BTC, ETH, maybe some of those promising alts we talked about, especially in RWA and DeFi, it mitigates that single asset risk.
Diversify. Makes sense. Anything else?
Yes, and this is crucial too. You must closely track the progress of those U.S. congressional bills, like the Genius Act.
Why specifically?
Because delays cause market disappointment. Even if the overall trend is positive, a setback on expected regulation can trigger a sell-off. So keep an eye on DC.
Okay, good advice. That brings us towards the end of this deep dive then. So to quickly recap the two major themes we hit. First, just incredible price momentum. Bitcoin smashing 120K backed by these huge institutional forecasts, pushing way higher, maybe above 200K.
Yeah, the headline numbers are big. But maybe more critically, the second theme, the foundation being laid for future stability, real structural legitimacy.
Right. Driven by that clearer regulatory intent from the SEC and just game-changing TradFi integration.
That Swift consensus link, CME going 24/7, these are fundamental shifts.
So the final takeaway seems to be, yes, the market's in greed territory,
Definitely feels greedy.
but that foundation underneath is structurally sounder than maybe ever before. The narrative has totally flipped from if blockchain gets adopted to how fast it gets integrated into global finance.
Exactly. The market's finally responding to real utility, not just speculation.
Which leaves us with one final provocative thought for you to mull over this week.
Yeah.
If Swift's new blockchain ledger really works, if it provides a truly frictionless 247 alternative to the slow, clunky, expensive global banking we have now,
The big if.
how quickly does the total value lock, the TVL and DeFi protocols absolutely surge? And maybe more importantly, what happens to the financial systems, the banks, that fail to adopt this kind of technology?
Yeah. What are the consequences for them?
Something to think about as you navigate the market. We'll catch you on the next deep dive.